The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. I posted in to Tiger TV the chart from John Hushman Economics, and it basically shows the tops in the market and how Barron's usually talks about tops, and puts them on the front page of Barron's. But we're going to cover that first. I had two questions, actually the same question from two different listeners over the weekend, and they wanted me to discuss W.D. Gann, in particular the fact that you hear so many things about Gann. He was a trader that was born in the late 1800s, around 1880, I believe. He died around 1954. Down in West Palm Beach, left an estate of about $250,000. He was a 33rd degree Mason, and he wrote volumes and volumes and stuff about the market, and he was featured in many prominent magazines during the 30s. Financial Times was one of them. That's not the Financial Times from London. It was the it was called Financial Press here in the United States, and he had had some things to say about a market at that time. When I worked at Drexel Burnham during the 70s, after the first year there, we had a very good year, and they asked me to hire someone to help me, and so I hired Jim Twentyman. Jim was a private trader at Commodity Corporation, and I asked him to come to work for me at, he worked for me, but he worked with me. I was never his boss, technically, but we had offices side by side, and Jim was a consummate researcher, and he always has been and still is. And one of the things we've always wondered about was W.D. Gann, and we had a very lucrative budget at Drexel Burnham. And so we had Jim take a 6-month sabbatical to just study W.D. Gann, and we found out, about the estate that he left. And we interviewed his two of his three children. He had a son who was a dentist, another son who was a bond trader at Dean Witter, and then he had a daughter, but the daughter wouldn't talk to us. She didn't care for her father for a variety of reasons that we don't need to go into, and no one knows what they are anyway. So anyway, what happened was, both of the boys said, their father didn't leave $55 million in the Bahamas or anything like that. And there wasn't offshore banking back in those days in the Bahamas. That was basically just an outpost. They didn't have, the banking facilities that we have now. That didn't start until the 1970s. So, all that stuff is really, you can't really prove it. You can't disprove it, but it's what people feed on when they, take someone's name and, move it out into, the history books and, what a person did or what a person didn't do. Now with the internet and all the communication that we have now, it's basically, everything is out there. So, if someone's going to say something, it's pretty easy to say, well, did he do this or did he do that? But these are the things that, festered through the years, and we hear all these things about W.D. Gann. Well, to me, and also to Jim, was the most amazing thing about W.D. Gann was the fact that being a 33rd degree Mason, he had to know, the numbers of the Fibonacci summation series, because that's part of, what they teach, is they teach geometry. And it was really, this, it's exactly what they teach. It goes back to supposedly the secret school of Pythagoras and the Knights Templar and all that other stuff that we still don't know about. But someone asked the question, how do you spell Jim Twentyman? And that's exactly how you spell it, Twentyman, M-E-N, just Twentyman. And Jim trades out of California, right on the beach. His office is about 100 yards from the water, and I speak to him at least 2 or 3 times a week. And but anyway, getting back to W.D. Gann, he didn't mention the word Fibonacci in any of his writings, and he wrote enough to fill 2 moving vans, because when he died, he had a partner named Edward Lambert. It was called Lambert again, and they sold that to Billy Jones and Nicky Jones up in Pomeroy, Washington, around 1981, as I recall. Could have been 1980. I'm not sure. It was one of those years, and it was just two full, moving vans full of stuff, and they always thought there was going to be, secret things in there, and then we never did find any. Nobody else did either. But he was a consummate researcher. He did a lot of great stuff. Well, one of the things that he did, what I think is really amazing, is he did this thing called the square of 9. In other words, you start with the number 1, and you just go 1, 2, 3, 4, 5, 6, 7, 8, and just keep putting it out into squares. But if you'll take the 1 and the 2 and just start drawing it, just connecting the dots between 1, 2, 3, 4, 5, pretty soon you're going to be looking at the Fibonacci spiral, the chambered nautilus. And I think if there was any secret in anything that he did, that was pretty much the same thing. Someone mentioned a gentleman named Ernie Quigley. Ernie happens to be a very dear friend of mine and also one of my students going back about 20 years ago. And he probably studied GAN as much as anybody that I know, including Jim Twentyman. And, I don't think Ernie has found any secrets at all. But, however, it has some good things that you can use. But, as far as secret stuff, folks, anybody that tells you that they've got a secret, don't walk away from that person. Run away from it. Because if it's a secret, it should be shared with everybody so that they can benefit from it. Because a secret doesn't do anybody any good. We all know that from, our childhood days. The old experiment, if you've ever done it, if you get 20 people in a room and you tell one person a secret, by the time it gets to the 20th person, it doesn't even resemble what the first person said. So you have to remember that. And with information the way it is now, it's even more important to make sure you uncover the real reasons behind something, because it's really amazing. I heard a statistic the other day from the CEO of Google, and he said that there's more information put out now within 12 days than there has been in all pre-recorded history. So you can imagine, the amount of volume that is coming through each day now, with the internet and all the other stuff that's out there. So it's really an amazing situation. Okay, let's get back to the chart that I posted, which is the chart of the Dow Jones Industrial Average going back to 1997, and there are 3 points on this chart that I think are important. One is the point around 2000. That's when we were having the tech bubble, and if you can see and you take a chance to look at that, you'll see that we had that expanding triangle that we're looking at right now in the Dow Jones and the S&P and some of the others. If you look at in October of 2007, you'll be seeing the same type of move that also occurred there, where you have waves 1, 2, 3, 4, and 5, coming out, and that's pretty much what we're looking at right now with the Dow Jones, where we are. What's interesting here is that if you took the big picture, and that's what I'm trying to show here, and that's what Barron's is trying to show you, is that you have a situation where you have the largest of all broadening pattern formations that we've seen in a long time. Let's put that a little more clearly. Forever. I have never seen one going back this far and this broad a pattern. So it's going to be really interesting what happens to stocks here, because the whole world is pretty much on the bullish side. Sure, there might be a little bit of a correction, is what they're saying, but what I'm looking for is something far more sinister than just a little correction. I'm looking for what we had happen during 2008 and 2009. It might not happen as quickly, but I think it still is going to happen. This is a big pattern. It has all the things that are there. And believe me, folks, it's really difficult for me here because I'm basically out here all by myself with this. You have a few people saying, yeah, we're due for a little 5 or 10% correction in the market, but we're looking for something, really big from this level. It, in fact, is one of our good friends, Rich Anderson, who comes on the show, on the Commodity Show. He sent me a little blurb that was really interesting, and he was talking about, he says it's eliminating stupidity is much easier than trying to stimulate brilliance. And, I agree with that 100%. And I don't want to be, stupid up here. So if we get above 16,000 in the Dow or 1,700 in the S&P 500, I will certainly, holler uncle and say, okay, on to the next thing. But, boy, this is a big pattern. I just don't know how people cannot respect its formation because of what it really looks like on a long-term basis. It's just really it's really quite amazing. Now I wanted to bring into you folks I wanted to show a couple things. One, I wanted to show the London market, the FTSE, going back. Hope this goes into Tiger 10. I'm having a little technical problem here. It's the FTSE going back 11 years, and it shows the very large AB equals CD pattern that is formed on the FTSE. And what's important about this is the AB leg is equal to the CD leg in both price and time. It's just really a really beautiful picture. And then it shows the butterfly pattern that is formed over the past 3 years from 2011, to where we are now. It also has that same type of a broadening triangle that we just talked about with the Dow Jones. It has that same, particular pattern in here. And I'm not going to do all the foreign markets because, we live here. We trade our markets, but I put these in the newsletter, week after week, trying to warn people. I might be yelling Chicken Little, but anyway, that's what I'm seeing. We had the same thing happening with the DAX, and the same thing happening with the French market, also. So they're all coming, together pretty much, pretty much at the same time. So it's a little ominous, when you see it, forming the way that it is. But that's the way it is, so you can't really dispute it, other than it's a chart. And if you don't believe in charts, then you're saying, well, maybe this isn't the time for us to be looking at it. So if you want to look at the Dow Jones on a smaller time frame here, which is going back just to the monthly chart, looking at it close by, you can see all of the numbers coming together of what we're looking at in the Dow Jones. And breaking records, going into new high ground. We haven't been as high as 16,000 yet, but I think we've got as high as 15,600. Well, that's the Dow. The NASDAQ has made new highs. The Russell has made new highs. They've all made new highs, and we'll see if this is going to be, something that is going to, keep going for a long period of time, or whether it's going to just end in a, some type of a sell-off of some kind that will give us, who knows, some type of a move of some sort that will do it. I wanted to bring out the Japanese market because I think that's important. We've got to take a little break here, and then we'll talk about the Nikkei Dow.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. Funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're going to be talking about the Japanese stock market on a long-term basis. We topped in December of 1989. I believe it topped, I believe, at Christmas Eve, New Year's Eve, as I recall. I know it was right near the last day of the year in 1989. I just remember that it was, something that was really dramatic at that time, and I was involved with it a lot because everything in the newspaper was telling us that the Nikkei was going to hit 40,000. And we hit 39,600, and then it went down, until we made the low in 2009, and it given back well over 95% of its value. We've had some strong rallies since 1989. We had one really strong rally in 1995 that went to a 61% retracement. We had another one in 99 that went to a 786 retracement off the past 2 years high. We had one in 2007 before our big crash, and that one also stopped exactly at the 786. And then we had this final one that topped at the 786 level, at the 16,000 level in the Dow, and we've dropped to well over 2,000 points in the Nikkei since that was hit, and we're starting, it looks like, a pretty convincing correction, and we're going to see if this correction is going to give us some type of a triple bottom possibly in the Japanese market. The thing to remember here, folks, is that as these markets are making these high levels like here, the news has to be the most bullish. The pundits will always be telling you all the stories where why stocks are going up, and very few of them tell you that stocks are going down, or will be going down. If you remember the story in Google, what am I talking about? You remember the story that we had in with Apple Computer when it was at $700 a share. The fact that it literally did not have anybody bearish at that time, and it certainly was the place to be looking to go short. And of course, Google left a big island reversal, up in that level to tell us that that's what we were looking at. Now, there is one thing that we've been watching really closely, of course, and that has been the VIX index. The VIX index has had a little cycle in there of about 48 days, and 48 days, and we reached that on the the 22nd of July, which was the full moon date, and now we're having a little bit of a rally, not very much, but there's no fear in the market at all. And I believe that sometime in the next month or so, we're going to be taking out the highs of the year, and that's up around the 22 level. Now, we did have the big Gartley that occurred on the full moon of June the 25th, and that was the high, and then the market came straight down. I mean, it was an amazing market because we topped on the full moon of May 24th. We went up to the full moon of June 22nd, and then we came straight down into the full moon of July 22nd. So this has all been, pretty much a lunar phenomenon. And there's just been a new published study from one of the Swiss medical schools and medical journals that lunar events also trigger sleeplessness in many, many people. I haven't had a chance to read it yet, but I have it on my wish list to look to see why the lunar things would affect sleep, which makes a lot of sense because our bodies are 85% water and they're controlled by the tides of the moon or the gravitational pull of the moon, and so that would affect, I think, sleeping, because I believe that our bodies are just like little batteries, and we react to these electromagnetic things that are happening in our universe. And that's just my opinion. I'm going to get off my soapbox now and go on to the next thing that we want to cover. I really think that we need to talk about the U.S. dollar here, because we are at a level in the U.S. dollar that I think is very, very important. If we get a chance to look into Tiger TV, you'll see that there is a chart that goes back through just recently here, when the euro got up to that 134 level. We were looking at that same the 1, 2, 3, 4, 5 reverse point wave pattern that we had, and now the euro has came all the way back down into the 127 level, and then from that level it rallied back, and we're trading around 132.67 right now. So this is the same pattern that we're seeing in the stock market we saw in the U.S. dollar. And when we get back from a break, we're going to cover a little bit more of the U.S. dollar, particularly the dollar yen. That's the interesting one now.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, folks, we're back, and we have a caller from Tampa, Florida. Are you there, Justin?
Yes, here I am.
What can I do for you, my friend?
Oh, just want to say, hey, Larry, I just got one of your books, Trade What You See, from a friend of mine who speaks really highly of you, and I really like your stuff because you're a Fib guy, and I'm a Fibonacci guy, so a lot of your techniques and your methodology really kind of harmonizes with what I do. So,
well, good. I'm glad it helps. What can I do for you today?
Can you take a look at the soybeans? I'm pretty bullish on this, and I know it's been a persistent downtrend, but if you look at the daily chart, it looks like we had a 5-leg up, and now we've had a big ABC pattern coming into a 786, and then we had a big spike low on Friday. So I've got a small position, but I'm pretty bullish here. It's a very low-risk entry point. I just want to get your thoughts on it.
I agree with your low-risk entry point. The difference is that I posted into Tiger TV. I hope you get to see it, Justin, but the ABCD that I'm looking at, the one that occurred from June to where we are right now, measures down about another 50 cents lower, which would be down around the $11.60 per bushel level. That's for new crop soybeans in November. The August beans are, of course, a little bit stronger, but I like to trade the Novembers. So I think you're okay here. The one thing that I don't particularly like about it is that the 786 came in at $12.22 a bushel, and we're about 7 cents under that. So I'm a little bit skeptical. I do believe that if we take out the lows that we made last Thursday, last Friday, that we are probably you probably want to yell uncle at that point, and then wait to buy them a little bit lower, because they must hold this level that we made Friday. That's my opinion.
Here's something I've also noticed, especially with the beans and platinum, some of the metal markets, is that a lot of times the retracements are really deep to shake everybody out. I've seen them go down to the 886, and even lower. So my stop's actually below the low we made in May. This is on the November contract as well. Actually, I take that back. It's April 24th was the low, 1186. Because I'm leery of that. So I'm concerned about putting my stop below that low, and that just looks like a prime area for them to run people over and then take it back up, because it happens so many times. These deep retracements. I don't know what your thoughts are on that, but.
Well, I agree with that 100%. The difference is that I don't like to risk that much. I mean, you're talking about well over $3,000 a contract, and I'm just a little guy out here in Tucson, Arizona. So when I take my my shots at being a farmer, either soybeans or corn, the most I'm going to risk in beans is about 15 cents, which is $750. I'm not in the bean market right now, but I am looking to buy corn. Within about a penny or two of where December corn is right now. It's down around the 472 level, and a little bit lower when it gets to 468. I'm going to try to be a farmer again and use about a 10-cent stop or $500 in the corn. But the beans, that's too much of a risk for me to take. And not only that, but think of it this way, Justin. That's a long way down. $3,000 from here. And what if it keeps going down even lower than that? Because a lot of times they don't get the memo that it's supposed to stop there. So just
I better send them another cable. I have the minis though. I've got like 3 or 4 minis, so I'm not a full contract in there, so it's a little bit lower risk on it. I just like the entry point on it, and I'm looking at wheat and corn. They look like they're kind of trying to form a bottom, and the sentiment levels are real bad. I mean, they're just real pessimistic extremes. So
yeah, these have been going down, and they've had lower highs in beans ever since January. In February, we made a beautiful Gartley sell signal up there at 1350, and then we had another one around 1330. Those were lower tops, and we've been coming down quite a bit. We've got bumper crops coming, and we're certainly going to need the bumper crops, but just be careful with the stops. That's my only advice to you.
Okay. Well, thank you.
All right, Wayne, thanks for calling in. I hope you call in again someday.
Okay, thank you.
Oh, you bet. That was our friend from Tampa, Florida. Now, I had a request. Well, let me cover the one thing that I wanted to cover before we had lucky enough to get a caller in, and that is the Japanese yen versus the U.S. dollar. This is the cross rate that really mimics the Nikkei Dow. By I think it's a 95% correlation between the two. And we've just completed a bullish Gartley today at the 97.60 level. Whether that's going to hold or not, we'll have to wait and see. The 97 level in the dollar-yen is very, very critical, because if it fails, that sets up prices, far, far lower, and that would be, very negative to the Japanese stock market also. So that would be something that I would, recommend, you keep an eye on. One other email that I got over the weekend, the one, of course, I got 2 about the WD Gann square of 9, asking about that, and I think we've talked about that here on the show. The other one that I received was the what are my favorite books, and of course my favorite books are the first 10 that I wrote. Now that's a joke, folks. I'm just trying to be funny here. I'm trying to. There, I was able to do it. Good. I posted into Tiger TV what I think are my 10 favorite books, and I have well over 3,000 books in my library, and these are my favorite. Of course, H.M. Gartley, Profits in the Stock Market, is my all-time favorite, because that yielded the Gartley, the Butterfly, the 135. It's all the patterns. I mean, Gartley had them all. I mean, he just he was the master of this stuff. So the next one was Edward Lefevre's Reminiscence of a Stock Operator. It's a story of Jesse Livermore. That was the original book on psychology, and that was the only book we had for many, many years. And that's a great book to have. Bryce Gilmore's books, Geometry of Markets, Volumes 1 and 2. are terrific. And then if you really like Fibonacci and you like some of these things, I recommend a book called The Dimensions of Paradise by John Michel. He's a English writer, and he's written several other books on the same vein, but basically he shows how the numbers in these sequences of the numbers of sacred geometry, of which the Fibonacci numbers is part of that area of sacred geometry, and that's what John Michel shows it. He's several books. The main one was The Dimensions of Paradise. There's a couple of others, but it goes back well into the Sumerians, going back 8,000 BC. Also, I like Tony Robbins, his personal power books or any of his tapes. I've done all of the Tony Robbins things. I spent thousands of dollars with him, and it was all worth it. And I think he does a great job using neuro-linguistic programming, to try to teach our minds that we can do anything once we, decide to do it and go through with it. And right behind that would be Napoleon Hill, Think and Grow Rich. That was my first metaphysical book, I guess, back in the 1960s. I was able to meet Napoleon Hill and W. Clement Stone when I was in college at Indiana, and it was a really a wonderful experience for me. I never got over it. It was just really fantastic. Another book that I think is very important is Lillian Watson, The Light from Many Lamps. If you've had any tragedy in your life, and all of us do, no matter who we are, we all have tragedy, no matter how lucky we think we are, something always comes along. That the man with the sickle is always there taking a loved one from us, or, illness or something like that, or whatever it is. That's a book to read. Lillian Watson, The Light from Many Lamps. It was written in the 1940s, I believe. And it's a story of all the people that have gone before us that have had these problems. And these are famous people. Some are not famous, but most of them are very, very famous, including Winston Churchill, Thomas Edison, Abraham Lincoln. There's just so many of them in there that it's really amazing, the stories and the tribulations that people went through. One of my mentors, John Hill, who's 89 now and still trading a lot, his technical analysis of commodity markets is great. And then Manly Hall's The Secret Teachings of the Ages is a fabulous book. And then last, I had to put mine in, Trade What You See, because I think it is a pretty good book. We've got a call from Charlie in Farmington, Massachusetts. Are you there, my friend? What can I do for you?
Hi, Larry. Yes, thank you. SCO, I know you don't do these ETFs, but it's oil short.
An oil short? I like short oil. Yeah. I think oil's got a shot here to break. I really do. I've been short gasoline for a while, but let's put this ETF up and take a look at it and see if it follows along with, someone has, I've already actually done the work on this before. It shows this is the inverted versus the price of oil. In other words, when you buy this, you're going short oil. Is that correct?
Yes, sir.
Okay, well, if you take a look at this, the low was 25. It's trading at around 30 and change right now. I wouldn't buy it here. The reason why is it's been up for 6 days in a row. But if it would back off to say 29.5, I would certainly I'd certainly take a look at that, for a potential buy. That's the way I would view it. And if it goes below 28, that means that oil would be above 110 per barrel, and then you don't want to be short because that means it could go a whole lot farther to the upside.
Okay, I'm in at $30, about $30 and a couple of pennies. So
that's a fine, good price. Just don't let it go below 28. That's the main thing that you want to do.
Okay, great. Can you take another one?
Absolutely. You get two for the price of one today because it's a special day today, the 29th of July. What can we do for you?
That's what we love about you. It's a biotech company. It's SNTA.
SMTA.
SN is in Nancy.
That's at Santa Monica Transit Authority. That's a bus system in Southern California. Hold on a second. SN. Oh, I got the wrong.
Hey.
Okay, hold on here with me 1 second, and let me, when you're Italian, you don't get to, spell very well when you're in school, so I have to do this again. So it's SN. TA. SNT.
Correct.
I never get a look at some of these stocks, so we'll take a look at it here and see where we are. It's a $7 one, so it's not a it's definitely not a NASDAQ featured stock. Boy, it's had some. Did you get the memo I said about buying it on Friday?
I actually have been holding it for probably a month.
Well, it's had a heck of a move here. It's looks like it's just about it's almost doubled in price today. So there had to be some type of a news announcement, on the stock. But down around $3 a share. Nobody liked it, and at one time, the stock was at 12. So I'd be really skeptical of believing what's going on with this stock right now, because it's almost making a 61% retracement off the April high. So just be careful with this. Are you in it at around $7?
I'm in it at about $8, actually.
Okay, I'm going to give you a little advice from 50 years of doing this stuff. If you get back to even on that stock, get out. Because the markets don't very often give you chances to make up for a bad mistake. And you went from $8 to $3.60 on that, and that is that's a big hit to take, in my opinion.
Oh yeah, it is.
Okay, so if you get close to even,
it's broken over its 9-day moving average.
Well, with the action today, it broke over about any moving average.
There you go. Okay, I appreciate it, Larry.
Okay, what you need to do is have another good day like today, tomorrow, and you'll be back to even, and that's where I would get out of the stock. You made a mistake by not having some type of a stop in it when you were at $8, because if you'd have bought it at 8, you could have easily got out at 7, and that would have been a very simple risk, and you could have bought it back at 4, and now you'd be setting it, really good price profits, but that didn't happen. So you've got to protect yourself, and if you get that way, you'll be much better off. This is very similar to what happened to our previous caller, Charlie. He's in soybeans and he's down just a little bit, but his stop is, I think, way too far away. I think he should raise his stop to protect himself, and then if beans get lower, he can buy them back at a better price. And it would be far easier to do that than if he were to try to make a run for it from this level and thinking, it's going to go back to $16, whatever it is in beans. So try to protect yourself, my friend. I think that's the best thing to do.
Will do. Thank you, Larry.
All right. Thank you for calling in. I certainly appreciate that. Now, I wanted to cover the gold market because I want to we have another caller? Nope, I guess not. One in a day is about all they allow me, I guess. Okay, we're going to take a look at the gold market here because we've been in a congestion here for the past several days, going back actually a week, and I believe that we've got a chance for gold to get down to the $1,300 per ounce level where we broke out from. And when we get back, we'll take a little break, and then we'll wind the show up with the gold and silver.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and we're going to talk about gold. I posted into Tiger TV the daily gold chart. It shows the big butterfly pattern that we had complete down at that 1177 per ounce level, which was the 61% retracement on the long-term weekly chart of gold going back to 2008. That was the first major ABCD pattern that we've had in gold in 4 years. And since that time, we rallied $170 per ounce. And I believe right now we're in the midst of a correction here that'll take us down to around a little below the 1,300 level. We broke out actually from that $1,300 level, but we also had a breakout around 1,270. So somewhere between 1,300 and 1,270 per ounce is where I believe we're going to pull back to in the gold, and then start another leg up. This has a potential to really be a very good one, and the reason for that is because at the bottom that we had down in late June and early July, we had about the most bearish stuff on gold that you could ever imagine when we were below $1,200. I mean, it was coming out of the woodwork. It was about as bearish as we were in stocks in March of 2009. That's how bad it was. The $64 question is are we going to, have another up leg here, or is gold really in, a monster bear market that will take us below $1,000 an ounce? We've been rallying for just about exactly 1 month today, and so we'll see if this rally is going to continue. We're in the midst of a little bit of a sell-off here, but in fact, really not very much. Actually, gold is up today from where we were on Friday, but the high was made on the 24th of July, right after the full moon. So it's going to be interesting what happens on this pullback. Silver is still lagging gold. It can't keep its head above $20 per ounce by very much, but that's neither here nor there. We don't know what's going to happen. I don't trade silver because it's just too illiquid for me. It'll move 20 cents in a matter of seconds if there's no movement in the market, whereas with gold there's plenty of orders always to take your positions without any additional risk. In a question about the bonds is I really believe we're in a really bad bear market in Treasury bonds. I just don't know whether we're going to get the rally up to the 137 to 138 level in the September bonds that I'm looking at. That would be a 61% retracement off of the high. But, we topped in bonds well over a year ago, and I believe that we are, we're heading down into higher interest rate territory, without, any trouble at all. I think it's very important. One other comment about the books that I posted. I didn't talk enough about the book called The Secret Teachings of the Ages by Manly Hall. He was born in the late 1800s. He was born with a platinum spoon in his mouth. He studied his whole life with his mother. He was self-schooled, and he wrote the best book on the metaphysical parts of our earth that you will ever reach. It's called The Secret Teachings of the Ages. You can buy it online. The really good book is about $155, and that's got some of the most beautiful art in it that you could ever imagine. And that Pythagoras piece that I always use comes out of that book. And but it's really an incredible piece if you're interested in the metaphysical part of these numbers, including the Masons and the other. There were just so many of them that he covered. You just couldn't. Christianity, it's just amazing the stuff that's in the book, and it shows how all these things are together. That's it. Live every day in an attitude of gratitude, and may God bless each and every one of you.
That makes people come up, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.